Hey traders, Clifford back with another video on trading the charts. So today I wanted to show you something that can happen when you're trading the trend that can be very beneficial to know. It actually caused me to miss a trade opportunity, but basically it's a variation of the pullback strategy. So with that being said, let's get it going. Okay, so the trend is your friend. You know, I mean, that's like the most famous saying in all of trading, I think. And in my opinion, it's really true. You know, the trend is your friend. And if you're on the right side of the market trading the trend, you know, you got a pretty good chance of making profits. And you know, usually the market does trend long term when it's in a strong trend. I mean, sometimes you get those consolidation periods that break out into new trends as well. But how do you actually trade the trend and be able to capitalize on the biggest opportunities? That's what we're going to talk about. So basically, when you set up your trends, and you could do this a couple different ways, but I like to use the daily charts. I believe the daily charts are the best data to look at because I'm looking at a whole year of market data. The market we're studying today is the dollar index, US dollar index futures. But this what I'm going to go over could be applied to anything. You know, this chart could be your favorite stock. This could be Microsoft. This could be your favorite commodity, crude oil. This could be your favorite crypto, you know, whatever, Bitcoin or whatever. So it applies to all markets, what I'm about to go over. And basically, the way you trade the trend is what I do now, again, I only use the daily charts. I believe that if you draw when you see three bars, you're looking for three bars. And when you find three bars that connect to each other, basically all you need to do is find the three bars that connect to each other and draw a straight line and project that line as far as you can outward. And that creates the trend. Is it 100% of the time always accurate? No, but I'd say about 90% of the time it can be. So when you have an uptrend like this, you know, we got three types of trends. If you're new to technical analysis, definitely check out some of my other videos on YouTube where I go over basics. But this is basically a little bit more advanced, but not too much. So you have an uptrend, of course. That's one way the market can move. Another way the market could move is the downtrend. And then, of course, you got the sideways market as well. So we're talking about an uptrend here. And so how do you trade the uptrend? Well, basically, the best possible place you could ever buy in an uptrend is right at the trend line. You see how see how the market trends? You know, basically it's like a stair-stepping move higher, right? So you got the big rally here, and then you get a pullback. Then you have another big rally, then you get a pullback. Another big rally and a pullback until finally the trend ends, right? So the trend is your friend. So basically, the best place to buy is right at the trend line, right when it pulls back. So you'd be buying here. You know, you want to buy when it gets close here. You want to buy when it gets close here. And I was looking at this market the other day, and I was saying to myself, okay, well, I know the best place to buy is at the trend line. So I'm waiting for it to pull back to here. This trend line right here. We're going to keep on going with this uptrend. You know, US dollars and in a crazy uptrend. I mean, it's just people are just buying it like crazy. The whole world's buying it like crazy. It's going to probably pull back to this trend line, and I'm going to buy it. Well, I was incorrect. It never made it back to the trend line. And here's why. So what you want to look for in an uptrend, and again, the best place is to buy it at the trend line. But sometimes the market will give you a sign that it may not make it to the back to the trend line. And here's what I mean by that. So this day right here, August 26th, you see the market formed a strong reversal. Like this is a hammer. If you don't know what that is, check out my other video on YouTube. I go over what hammers are and why they're very powerful reversal formations. So here, it basically the sellers pushed the price all the way down here, and then when it got close to this level, buyers just rejected the hell out of it, and then boom, smashed it right back up to close where it started. Right? That's a reversal formation. Basically, that's a sign that the buyers are not going to let them take the price lower than this level. So if you're looking to buy here, you might miss the move, because if you don't pay attention to this, this is actually a bottom being, this is actually a support level being created. So it's not going to make it back to the trend line like it did here, like it did here, and like it did here. They're saying they're putting the brakes on it right here, and then look what happens. The market tries to retest it again, and boom, just a strong bounce off that level. Now, I mean, could it have made it back to the trend line? Yes, it could have, but it didn't. The point is that sometimes you don't have the goal of this whole video is that sometimes you don't have to wait till it touches the trend line, although normally I do, because that's the best place to get in. Sometimes you could get in right when you see the rejection. So here's an example, right? Like if you know that this is the rejection right here, and you're watching this candle, the best place to enter is when the market retraces 50% of that move. Like, so you see, I don't know if you can see it, but like, so here is the top of the candle, here's the bottom of the candle, just go right in the middle. And that would be like right when the market tested it back here just a few days ago. And you would have caught this nice little bounce here. So that's a good trading strategy to have. So basically, the whole point is just be aware of these support and resistance levels, because sometimes they can be an early sign that the market's going to move higher before it pulls back. So that's about it for this video. If you like the video, feel free to like, subscribe, put your comments below. Just wanted to make a short video on how you can trade the reversal before the pullback. But again, if this candle would not have appeared, I would not buy until it hits this trend line, because then you're buying at the best possible price. And as you see, every time it's hit the trend line, it's been strong moves to the upside. I mean, strong moves to the upside. So you would really be buying at the best price right here. But again, because that hammer formed early, that's a sign that you want to buy earlier. So yeah, so that's basically about it. And if you are new to trading, definitely check out my other videos on YouTube at Trade the Charts, and they'll go over all the things like what these hammers are, how to draw your trend lines, and everything else. So with that being said, as always, trade what you see, guys, and trade well.